A lot of aspiring retail traders are losing a lot of money from massive moves caused by fundamentals in the markets. True fact, before you skip ahead, that will save you thousands of dollars and unnecessary losses in your trading. Massive moves on the yen pairs last week, wasn't there? And make no mistake about it, a lot of people lost a lot of money. In our private client group where I trade live in front of everyone, we made some pips, rolled stops to break even to avoid that massive hit. But again, a lot of people don't. With these kinds of moves, I guarantee you, the majority absolutely get destroyed. With this kind of volatility, we tend to see history repeating itself in terms of traders doubling down, revenge trading, trying to make back that which they lost, spiral deeper into the endless abyss we call the black hole. Remember, only 8% of people on a 5-year average are consistently profitable and are successful traders. 8%. So next time you see and you watch these marketing ads that are out there and they show you massive wins, anyone can do that and package it up and sell a dream. Don't trust that crap. It's nonsense. Think for yourself. It's vital to do so. There's under a 10% success rate for consistent profits. How many of those knobs trying to sell free content are genuinely wanting to help others achieve the skill set in trading? Hardly any, if at all. Be careful. My advice is don't trust anyone. Don't take my word for it. Trust the process that professional prop firm traders do and what we implement here day in and day out. Protect your hard-earned money. Protect your time. As always, timestamps below for identifying market moves, using if equals N, and putting it together on our pound yen bat pattern opportunity that we are going to take a look at together. To the charts. I'm going to take a look at this bat pattern opportunity that we have. So I'm eyeing off a level to sell right here. If we get back up into, notice if we get back up into 207s, 500s right there. And you can tell we're taking a look at the market moves right now. Trending. We're taking a look, as we can see from bottom left to top right, we're definitely trending towards the upside here. Now, how do we identify the trends? Because there's a lot of information out there on how to identify trends in different ways. And I do it in 3 ways. And I've been doing this for over a decade. It works well. And the reason is we ask 100 different traders how to identify bullish or bearish markets, and you are going to get 100 different answers. That in itself leads to headaches and confusion and skewed results in your trading. That's why we do it in a very simple 3-step manner. 3 moves. 1, 2, 3. And everyone knows from last week, we covered this. Market moves in 1 of 3 ways, right? Either bullish, bearish, or consolidating. Here's our starting point down here. We're taking a look at a trend towards the upside. We have an initial move from swing low to swing high right there. So we have an initial high, followed by the market putting in a pullback here. We get a move towards the upside, followed by a pullback. Yes. And then we get the market coming all the way up and giving us a what? A new structure high. Yes. We get a move above our previous cycle high right here. As we do, we get a higher high, higher close. That means price action. The candle has closed above our previous high. So that gives us a new structure high. We've got 1, 2, 3. That's it. We've got an initial move up, giving us 1, followed by a pullback, giving us 2, followed by a new structure high, giving us 3. 3 simple steps. That's how we identify a bullish trend. The same way we would do it in the opposite direction. We have a move towards the downside, followed by a pullback right there, followed by a new structure low. You get 1, 2, 3. As soon as you see this pattern happen in the markets, This is now signaling to us that price action intends to go lower. Therefore, you have a bearish trend. What we would need is a pullback here for a potential sell opportunity, as we discussed from last week with trend continuation trades. That is the opportunity that would present itself in a bearish trend. Back to our bullish example right here. All we need now is what? Price action to pull back into this level right here to identify a buy opportunity towards the upside. Again, trend continuation trade, hopping on the bullish trend. This is how I identify trends over and over and over again. We can consistently identify market moves and remove confusion and headaches, which ultimately gives us profitable results if we do it the same way. So if you follow along in the same way, and let's focus on 1, 2, 3, this will gain clarity and confidence in your own trading. That's why we do it the way that we do it. Yes? As you can see on the pound yen here, it does the same thing, right? We have a starting point down here. We have a move up. We have a move back down. We have another move followed by a break and close above our previous highs right here, indicating what? 1, 2, 3. Price action is signaling to you. It is telling you that it intends to go higher. And you can see this in any market on any time frame if you just apply the same simple steps. We get a pullback right back down into this level, and then you're looking for a buy opportunity right there to get involved on the trend. Bang. A retest of the highs, that would have been your targets for a trend continuation trade. We get another move towards the upside, followed by a break and close above right there. We get another pullback back down into this structure level, just a short one, bang, followed by a new structure high. We get a pullback, and this keeps repeating itself over and over and over. Yes, towards the upside, boom, followed by a what? Now we fall off a cliff, yes, and we violate this low and this low right there. Now price action stalled at this structure level, and this is going to give us an opportunity as price action has moved towards the upside. Let's zoom in here. Price actions move towards the upside, followed by a pullback. We're retesting this low. Now I'm looking for price action to move all the way back up into exactly what I said earlier for a potential sell opportunity. We have paused right here at this decision point. You can do this too. Now, if you like this style of trading and you want to learn the language of the markets, then be sure to check out the description and hit the link to our free members area and get started doing so. Let's take a look at using the if equals then now. This is what we want with repetition in our trading, because we want the same actions which lead to the same results in our trading. That is key. Same results is very important. That's why everything I do every single week is based around a syntax in order which events occur. If equals this, then we do that. So if price action does this, then we are going to do that. Because aspiring traders are struggling with consistency and discipline. That leads to inconsistent results, missed opportunities, and unnecessary losses. Yeah? That is not what we want. So by sticking to an if equals then, we can eliminate guesswork, maintain discipline, and achieve consistent results. You don't have to overcomplicate this. Easy to do, and if you stick to this, you'll find more clarity and more consistency in your own trading. All it is if equals this, then equals that. If I can spell that. If equals this, then equals that. So if we get back to our example here, and we have starting point there, we have an initial move up, don't we? So if we have an initial move up, then we wait for a pullback. See? If we get a new structure high, then we have a trend. Just keep it simple. That's it. Take a look at the other example that we had earlier. Starting point. If we get a move towards the downside, then wait for a pullback. If we get a pullback, then wait for a new structure low. Yes? That means you have a bearish trend. 3 steps. That's it. Using an if equals then, you can stay consistent in your analysis over and over and over again. We're going to apply that to our, not to our trend, we're going to apply that to our pound yen opportunity in the form of a bat pattern. So we want to tie it together. Let's remove the drawing tools. Yes. We're going to zoom in so it's easy to see right here. And we just follow the criteria. Just real quick, you would be surprised how many traders actually get pattern trading wrong. By getting the ratios correct and doing the entry stops and targets correctly and managing our trade properly, we can avoid the common mistakes that others have and in turn achieve the consistent profitable results that we want to have. So you can achieve this too by doing it in the same way. Allows you to stay disciplined and you'll see the same consistent results in your trading. And that is what I wish for you. Our first thing that we want to do, right, is identify our highs. We have our high here and we also have our low. This is known as our impulse leg. We're going to take our swing high like this all the way down to our swing low. The first thing that we want to do is measure a Fibonacci retracement because we want to know what our B point retracement is. Let's send the candles towards the back there. So the first thing that we want to do is we measure swing high to swing low with our Fibonacci retracement. Here we go. If equals, we get a move up to a 50% B point retracement, then we're going to look for our C point retracement. Let's take a Fibonacci retracement and go from our swing low all the way to our swing high right there. If we get a C point retracement back down into, we do get a 50, we get all the way down into a 886 right here. That's good. If we get a C point retracement down into our 786 right there, then we're looking for a CD completion. So if we take a Fibonacci retracement tool from swing high all the way down to swing low, let's look for that CD completion. So if price action does come all the way up into an 886, then that completes our bat pattern right there. So draw it in like this. And all we did is use an if equals then syntax in order which events occur. We do this time and time again. As you can see, you will be consistent in your trading, consistent in your analysis, which is ultimately what we want to have. If equals B point retracement into a 50, if equals C point retracement into a 50, if equals CD completion into an 886, then you have a potential sell opportunity at the D point completion right there. Now let's do our entry stops and targets. I'll make this look a little bit better as well. Grab our triangle tool like this and draw it in. So we have our X to A down here, A to B, B to C, and C to D all the way up into an 886 right there. This would be known as our sell zone. So if, staying on the if equals then, if price action gets a move all the way up into our D point right there, then we can sell into target 1 and target 2. What does that look like? Well, we want to enter at the 886 and we want our stops at the 113. And then we will do our traditional targets for this pattern trade as well. Let's grab our Fibonacci retracement tool and take it from X all the way down to A, full leg of the move, like so. Again, we want our entries at the 886. So let's grab our dealer thingy right there. Let's front run right there. And we want our stops at the 113, which is above our swing high looking left. So want our stops above our X point, because if price action does move above that, then potentially might get a move down and then continue towards the upside. We want to get out of it. Also known as cutting your losses. Excuse me. So we want our stop at the 113 every single time. We want our entries at the 886 every single time. Now, where are our targets going to go? Well, let's take a look at our swing low down here to our swing high right there. So full leg of the move, big swing. Grab our Fibonacci retracement tool and we'll take it from swing low all the way up into swing high right there. Now for our targets, target 1 will be a 382 Fibonacci retracement. So drag that down into the 382. And then what we'll do is clone that, move it to the side, because we always shoot for double targets here, and drag that down into a 618 right there. So for target 1, you have over a 1-to-1 risk to reward, and target 2, you have over a 2-to-1 risk to reward there. Now remember from last week with the pattern trades, what are the statistics? What are the stats? When you do it in this way, when you identify it the same way, when you're using the if equals then, when you're looking at potential trade opportunities, notice that the emphasis today was in the same way every single time. So the right action steps are done in the right way. And that's going to lead to consistent results. And those results for you ultimately are going to be profitable results in your trading. Now, back to the stats. With the pattern trade here, this is a bat pattern opportunity, and this is about 55 to 60% accurate. So we're over half right. Yes? If price action moves all the way up into a D point completion right here, I'm over 50% accurate that I'll guess the move that this pattern behavior is going to present. Right? Price action moves all the way up into our sell zone. I'm over 50% accurate that I'll guess the direction on the move will be bearish. Right there. Now, if I'm over half right, if I'm 50% accurate, take a look at my risk to reward profile. We are over 1-to-1 risk to reward. We are risking this much to gain this much. That's for target 1. And then of course for target 2, we're shooting for an extra bit of a move down into the 618 here. This is what I want you to take home with you. This is what I want you to pay attention to. This pattern, human behavior. If something happens once, it can happen again. And through our testing, we go back historically, the performance of this is we're over half right with this. With this kind of risk to reward profile, if you do it in the same way, you'll produce similar results. Now, those results are profitable results for you because you're over 1-to-1 risk to reward. It's the coin flip analogy, right? If we have a coin, so I use this analogy with everyone that I talk with. If we have a coin and heads we win and tails we lose. So heads we gain $1.50, tails we lose $1. And I give that coin to you. And I said, you're half right when you flip that coin. So every single time you flip, there's a 50% chance that you're going to land on heads. And I ask you, how many times do you want to flip that? The answer would be as many freaking times as we can. Because you're gaining more when you're right than when you are wrong. And that's it. That is the secret to trading. This is exactly how we want to do it. And this is exactly what we have set up in front of us right here with this opportunity. So this one, pound yen 4-hour opportunity, it is a potential, don't know yet, price action could absolutely just continue to drop towards the downside. If so, then this pattern is no longer valid. But as it stands right now, if we can get a move back up into our D point completion, then we have a valid sell opportunity in the form of a bat pattern on the pound yen 4-hour time frame. So let's watch this together and see how we go with this one right here. As I mentioned before, if you like this style of trading and want to get started by doing it this way, check out the description below, hit the link, create a free account, you'll forever be free, and enjoy the training that's laid out for you so you can trade in the same manner. Get the results that you deserve to have. For our private client group, I'll see you in the live trading room, and for everyone else, I'll see you next time. Be safe, enjoy life. I'm here for you always. Thank you so much. Bye for now.